Q4. Good morning. And before we get into this morning's show, I was doing swing trading today for a couple of years, and I just didn't get the traction that I wanted to. And I'm doing some revamps on the website, so I paused on doing the swing trading today. And I really want new names for the show and format. If you have any suggestions, what we could do better, please leave a comment either on YouTube, Twitter, what have you. Send me a direct message. That's fine. Love the feedback, negative or positive. Just don't make fun of my glasses or make fun of me like I look like Opie or something like that. I've heard that before. But any feedback whatsoever would be really, really good. We're really going to be focusing in on a strong 2022, building out the community. So any feedback whatsoever, in particular with regard to the morning shows, should they be shorter, longer, more engagement? Think about it. Let me know. It doesn't have to be today. Let me know anytime. So yesterday was a day that we can learn a lesson from, right? In a correction, and there are many people out there that, that haven't been trading since before COVID. They've never experienced a 5, 10%, 20, God forbid, a 20% correction because it hasn't been allowed. Literally, it hasn't been allowed. So whenever they paint the tape, whenever you wake up and you see after we've broken through critical technical support levels and you've gone from putting in higher lows and higher highs and breaking down to new lower highs and lower lows, when they paint that AM tape, the futures tape green, don't go chasing. Because sure enough, all they're doing on CNBC, Fox Business News is they're getting you excited. They want to get you off the stupid bench. They want the amateur money coming in. That way you provide a pool of liquidity from which they can sell into. Secondly, when you get a morning fade and then you rally back, and you have a slow drift up higher through lunchtime, maybe to about 2 o'clock, 2:30. Don't get baited in. It's just another attempt to provide a pool of liquidity to sell into. We saw it yesterday. So please don't fall for the games, the shenanigans that these computers, when they're going out to lunch for their 3 martini lunches, and when they come back from their 3 martini lunches and they're all tanked up, don't fall there for their shenanigans. Trade on your terms. Wait for the final minutes of trade before you decide, okay, we're looking to close strong here. We are closing at the highs of the session on up volume. We're off of key technical support levels. The market is following suit. Then make your long call trades. Or if you see us selling off into the close, then perhaps you want to look to add to your short positions. So just be careful. Some news in the morning. We're going to go to the pre-market futures in a moment. We're going to take a look at the chart of Robinhood. This is the ARK funds that I have up here. And ARK funds, they took a nosedive. I'm not sure whether or not. I just saw this article literally just before we went live. I had a conflict last night, so I didn't do a lot of analysis. So we'll take a look at the chart of Robinhood. I think that by virtue of them going public, it was just them trying to get, again, a pool of liquidity to dump their shares. So we'll take a look at that chart. JP Morgan warns if shares could drop 20% by year end. The authoritarianism over in Australia continues. What does this have to do with the stock market? Folks, authoritarianism, centralized government, like you've seen in Cuba, China, before they embraced capitalism. Now they're pulling back from capitalism. Now you've seen their economy crumble. When you hear stories of the Soviet Union, if you're not old enough to remember, I do remember what the Soviet Union looked like prior to Mikhail Gorbachev opening up the Soviet Union. Anything centrally planned is doomed to failure. They rely upon the heavy hand of government to keep everybody in compliance. And the saying goes in these countries that You pretend to rule us, we pretend to obey. So you don't have the helping hand of government helping businesses along. You have the hammer of government coming down on the entrepreneur. That's what we're experiencing now. You're seeing the test case down in Australia. This will not end well if this is allowed to continue. So that's what it has to do with the market. It's not political. It's just using history and learning from it. For those who forget history are doomed to relive it. I don't want to relive it. No deal infrastructure vote postponed after progressive refused to budge. The progressives, the so-called progressives, I hate that name because the last thing they are is progressive. They're the Taliban of Washington, D.C., and they are eating their own, and I love it. I just want to get popcorn. I want a nice beer, maybe a martini, and all I want to do is watch the leftist Marxists eat themselves alive and ultimately implode. That is what I want. To me, that's a great Friday night right now, is just to watch that. So let's take some comments. Jody, good morning to you. Top of the morning to you. Happy Q4 and happy Friday. Did I see Pat on? There he is. Hey, Pat, top of the morning to you. What's up, Bob? Good morning. All right. Let's do some pre-market now. As you know, before we do pre-market, let's take a look at how we closed out the major indexes on a quarterly time frame. Remember, today is Q1, the end of the year. We have many companies. This is the beginning of their new year, fiscal new year. So it's going to be a volatile day. We're down in the pre-market at current. At last look, for all I know, we're positive right now. But at last look, we were down. Taking a look at the Dow Transports. I think that the Dow Transports is probably the most significant chart out here for the prior quarter because it was the canary in the coal mine that was telling us that, you know what, all is not well. And sure enough, we saw a bearish key reversal. Technically not. An inverted hammer formation last quarter, the prior quarter, Q2, Q3, down nearly 6% on the Dow Transports. So the question is now, do we get a continuation breakdown or do we gap up higher to within this inside of last quarter's body? That's the big question for the morning. We were down on major volume. The Dow Jones Industrial Average. Bearish key reversal on the quarter. We were higher, new all-time highs. We closed lower. Take note of your indicators, your momentum oscillators. Putting in a lower high. We actually did break out a couple of quarters ago. Perhaps this is, we're not going to speak our book. We have a short position on. We're not going to speak our book here. At current, it looks as though we had broken out a couple of quarters ago. We're pulling back. We're doing a retest of the breakout point. Maybe this is just a pause for all we know. We need to watch for a continuation breakdown this quarter. And if we do get the continuation breakdown, the path of least resistance is to the downside. We see the MACD histogram. I don't really use the lines too much. I use the histogram. Still rising. So while it was a down quarter, it doesn't necessarily mean the markets are down and out. Volume was well below average. The S&P 500, an up quarter by just shy of quarter percentage point, first cup of coffee. And RSI lower highs. Volume very light and declining sequentially. Ultimate oscillator, kind of the same deal here where we broke out, pull back, retest. MACD histogram still strong. Small caps, of which we are short. Quarterly chart down 4 1/3%. We did close off the lows, to be fair. Let's see if I have a quarterly annotated chart. I want to update this. Here's the monthly chart. Let's take a quick peek at it first. We're still within the trading range, down on the month, just over 2 3/4%. Let's bring up that quarterly chart again. Outside reversal bar on the month. We did break a support level, but it could be just a consolidation. We're not going to say, okay, now you got to go shorting with reckless abandon because we broke a support level. No, again, we're going to be looking to see whether or not we take out the lows of the prior quarter. That's our first observation we're going to be interested in this quarter, and we'll go from there with determining, do we want to add to shorts, or is it time to close out that short position? What am I doing here? And move to the sidelines. All of my keys no longer had the letters on them. I'm literally relying upon Miss Jackson, who was my typing teacher in high school. Yes, typing. I don't think they have that anymore. She taught me my home row keys, so I don't really need to look at the computer. Excuse me, the keyboard, only to find where my home row keys are at times. And I've worn them off, so I need to get a new keyboard. Technology, we'll just blow through these. Technology, we closed up nearly 1 1/3% off the highs we closed. Semiconductors, wow. Oh, this is a weekly chart, that's why. Okay. Weekly chart, we have one trading day left to go here. We have broken support. See whether or not we rally back to recapture. Do we have quarterly? Yeah, we do. Quarterly chart, we closed down about 2 1/4%. The trend is still up here, folks. I mean, these are not charts that are screaming we need to get short or anything like that. It's just saying that we're taking a pause here. A monthly chart, bearish, key reversal. We closed right at the lows of the month. Very stretched on the momentum indicators. We have RSI at 77.46 on a monthly time frame. That's pretty extended. Why don't I have? Oh, I'm so sorry. I thought I was sharing my screen and I wasn't. I'm using new software. Sorry about that, folks. My bad. I really apologize. Thanks for sticking around, though. I would have taken off. Quarterly chart, the banks. Get that up there so you can see it. I can't move this screen of me. Let me take my face off. You don't need to see me. How can I move this? Jody's laughing at me. Jody, LOL. I love being able to do this. LOL. I'm used to it. Who is this? M. McNeil, PLTR. You got it. I was asked whether or not that should be shorted yesterday. I went over that chart yesterday afternoon. All right, let's get rid of me. Can we do that? How do I get rid of me? All right, we'll just do this. I'll figure it out. The banks quarterly chart, a good month, rising yields, no great shock. and I should go over the chart of the 10-year yield because it matters. It matters. It's the reason why we're pulling back, along with inflation. And the 10-year yield, a major move up higher last quarter, bullish key reversal bar. And we're putting in higher lows now. Will it be allowed to rally to historical norms? No, of course not. But we are certainly seeing bullish price action on the 10-year yield, and that is technically bullish for the banks. So the lesson to be learned here, or the note to take away here, is that when we begin to see a bottoming process in the market and we see yields stable with a bias to the upside, then you want to be looking at the banks as a sector to get long of, because they love rising yields because it helps their NIM, net interest margins. So the banks up nearly 2.75% last quarter. Biotechs, horrible quarter. Oh, that's not this is all messed up. All right, quarterly chart, not as bad. Let's update this. Volume is pretty big. Lots of down volume. Okay. Energy. Quarterly chart. Crazy volatility in energy markets last quarter. We did close down a little over 2%. So the question becomes this. Do we ultimately break out here? We have two fans, whatever you want to call them, resistance levels, call them cupcakes, doesn't matter. We need to get through 55.40 on the XLE. If we get through 55.40, we're going up to, let's say, a 60 handle on the XLE. Stokes looking good. RSI flatline, but holding 50, a quarterly time frame. So not the greatest chart, but it's certainly not down and out. There were buyers bidding it off the lows of the quarter. Gold. It popped up a weekly time frame. I think it's okay to go over the weekly time frame, and I want to go over the monthly time frame as well because it's significant. I want you to take note of what I think is happening here with gold. We have a very large gold mining position and a significant silver and silver mining position. Not as great as the gold mining position, but it's significant. So we've been clubbed over the head like baby seals for the past couple of months on our positions. But one of the reasons why we've been holding on, and we've just been selling covered calls against the position, generating cash flow. And it's worked out. It's always nice to, when you see the account bounce back, you have that cash flow you've been building up, and it's like, wow, that's pretty cool. But what I think we're seeing with gold, and this is my own opinion, is that you've seen Basel III. I would suggest you look up Basel III. And Basel III are the new banking requirements for collateral for the big money center banks. And what I think is happening is that within that framework, you're seeing that you're seeing paper trades getting taken off. Why? Meaning paper trades of gold and silver. Why? Because now they no longer consider paper gold, paper silver the same level of quality asset as physical. Because now they go by, under the new guidelines, they go by tier 1. That's physical gold, physical silver. I think it's tier 3. That's paper gold, paper silver. not a high quality collateral to put up at a central bank if you want overnight funding. So that's why I think that you're seeing a lot of distribution of paper gold. And you're also seeing, we saw it in the flash crash, you're seeing banks and China, Russia in particular, their central banks are looking to buy up gold. They've been buying up gold hand over fist. So I want to do what the central banks are doing. And I want to become my own central bank. So I think that what they're doing is that they're blowing out all the week longs, all the stop loss orders. They're hammering it overnight. So in the futures market, gold is getting clubbed over the head. And that's why you're seeing such weakness in the gold market, because under the Basel III requirements, the paper gold, the attractiveness of manipulating the paper markets and the COMEX is just not as attractive as it once was. So I think that in the coming quarters, after they unwind these positions, you're going to see a better fair value or price discovery for gold and silver. And this takes me a long-about way of saying, look at the weekly chart here after we got hammered. We have one trading day left to go. For all I know, we're going to close at the lows of the week. I don't have a crystal ball. But what we're looking at here is a chart on a weekly time frame that is looking really, really good. While we got hammered on price, lower highs, lower lows, here was the flash crash here. We're putting in higher lows on our stochastics. Momentum is going in the opposite direction on our indicators. You have a bullish key reversal bar on the week, which is helping the Stokes flatline out, put in a higher low. I'll get excited when we begin to put in a higher high. We're not there yet, but it's encouraging. But I think that is what's happening in the gold markets and why you're seeing such volatility, because people keep asking you, Bob, what's going on with this trade? You keep saying stagflation, good for gold and silver. Yes. Inflation, good for gold and silver, store of value. Yes. Well, you got to keep one other thing in mind as well, is that there's a perception that the Federal Reserve is being honest, and that what they're going to do is that they're going to raise interest rates. They can't raise interest rates. They could talk taper. Maybe they'll do a bit of taper before the market has a hissy fit. Listen, we haven't had a 5% correction in over 250 days. The Fed comes out a couple of days ago. So yeah, probably in December, we may probably go with taper. Look what happened with the market. They haven't even tapered yet. And they're still not going to raise interest rates until what, 2024? So let's get real here. So right now it's a matter of calling BS. It's a game of chicken with the Federal Reserve. They don't want to see gold rally because it embarrasses them in front of the US dollar. Their policies don't work. So if gold is ripping through the ceiling and the dollar is collapsing and inflation is rising, they're not doing their job. And everybody knows it. The emperor wears no clothes. That's why gold gets manipulated. And it's a well-known secret. JP Morgan gets a fine every once in a while, but nobody cares because it helps the narrative. Let's go to a monthly chart first, where I get a little bit more concerned. These Stokes here, I hate these Stokes. We're still well below the 50 mark. We didn't hook up in September. We still may see lower lows here. So beware. Rallies tend to fade when you have your Stokes down below the 50 mark in particular. Pat, your SQQQ is doing well. Yeah, it is. Yeah. We added more to that, as you know, when we started breaking. It was last week. So yeah, we're doing okay with that. Pat, Art bought Nugget yesterday. Good. I think yesterday was a good day to buy Nugget. I'm hoping that it doesn't close above 44 today, because we have covered calls that we sold on NUGT. That's what we've been doing. Again, as I mentioned earlier, we have a large covered call position. A large gold mining position. We've been selling covered calls against that position. And I have an open position expiring today, 44 strike. We came close to it yesterday. I hate having to manage covered call positions because I don't want to lose the shares, but we may have to. That's an easy problem to have when you're when you're long of leveraged ETF, managing your covered call position. It's a good problem to have. Glad to hear you finally expressed the views that I knew were there, but I didn't express due to Google Tube's algo's Gestapo. Yeah, yeah. That's why I got to be honest with you. That's the reason why I started live streaming. I love YouTube. For the YouTube algorithms out there, I love your platform. It's deep, it's great, it's intuitive. But man, you got to stop with the censorship. There's nothing else to call it. It's un-American. So, I had to start streaming to Twitter, to DLive, and to other platforms because I don't know what my life expectancy is on YouTube. Their threshold for tolerance is getting lower and lower, and at times I could be pretty hyperbolic. And I just speak the truth, man. I'm just speaking the truth. Look at IBM. Okay, you got it, Pat. Just be ready with a Rumble and BitChute alternative. Listen, if Restream, I'm using Restream as my video hosting platform right now to simulcast, I would get rid of DLive, and I would get rid of a couple of the other platforms that I have and integrate with Rumble and BitChute if they offered it with Restream. I'm waiting for it. To try to simulcast with Rumble and BitChute along with Restream at the same time, I would lose my mind. I'm only one guy here, so I have to wait until they force me to, meaning I get censored on one of the other platforms, or they integrate with Restream. And I'll be the day they get integrated is the day I'll be simulcasting. I haven't traded in 2 weeks, and the banks are getting hinky as hell. They're home port. Yeah, that's why they're trying to spike the market, and they want to try to force the little guy to get excited. Because remember, there's a lot of people out there that weren't trading before COVID. They got locked down. They had stimmy checks. They're buying weekly call options, and they're getting blown up. So they need to manipulate the market to provide a pool of liquidity so they can get out. Good luck with the changes. I'll be watching. Thank you all. Appreciate that. Odyssey doesn't set that. Yes, Odyssey is another one. Great point. BitChute, Rumble, and Odyssey. Those are the three platforms. And ideally, I've used them all. I think Red Pill is another one that we could simulcast on and have freedom of speech. I may even have two tiers of conversation. One is more of the straight talk of more. It's more politically based, and that'll be on Rumble, BitChute, and Odyssey. Whereas the other platforms, we'll just keep it purely technical analysis and financial. So, because again, I like the other platforms. Twitter, great platform, but it's a cesspool. Let's face it. And I don't like to say that. I really don't. I mean, they provided great conversations at times, but ultimately, it's a biased platform. And it's obvious. I don't think they even hide it anymore. All right, let's take a look at the pre-market futures action, and then we'll take some chart requests. All right, so, and this is why I wanted to wait to go over the pre-market futures. The last I looked, the small caps were getting beaten up. And technically, we hit the new lows of the week. Here's the Russell 2000, the futures. And we're down still over a half percentage point. We were down more when I first got up. We are bouncing back here a little bit. Would I be surprised if they turn the tape green today? No, it's short covering Friday. Just like you get turnaround Tuesday, you get short covering Friday. A lot of traders don't want to go home short for the weekend. They'll cover those positions. They'll re-short into the new trading week. So don't be surprised if we close positive. The Nasdaq. And I want to point out something. Let's just go back to the Russell. And you could see here yesterday on this. This is a 4-hour time frame. You can even drill down further, take a look at an hourly time frame, and you can see the head and shoulders set up here. Left shoulder, head, right shoulder. In yellow, we broke the neckline, and that's all she wrote. So no great shock that we sold off into the close yesterday. The Nasdaq, very similar setup. Rough close yesterday. Lots of institutional distribution. We are down in the pre-market by just shy of a half percentage point, 0.41% to be specific, but we are coming off the lows of the session. You can see clearly here, this is an hourly chart, that we have resistance above, as noted by the topping action. And we'll create an alert. I think time frame is one word, but we're going with it. Okay. What else do we have here? Where's my S&Ps? Go with the micros. Yeah, very similar price action here. So you're seeing a lot of resistance at around the 42.83 mark. We've been struggling to get through it, despite the fact that we sliced right through it like a hot knife through butter yesterday. And here again, you have a head and shoulders set up, left shoulder, head, right shoulder on a 4-hour time frame. Here was your neckline in red. Let's change this to a different color to memorialize it. Come on, think or swim. All right, it's not letting me do it. We got a bug in the system here. All right. In red, that's where the neckline was, and it's broken. We are seeing a bounce again, a bit of resistance above. RSI beginning to hook up. Some technical errors. I'll show you what I'm looking at. Nobody shows this stuff on YouTube. I would have been so interested. I'm getting these error messages, so hopefully I'm still live here. Okay. What else do we have? Let's take a look at the US dollar. The dollar had a very strong month, a very strong quarter as well. But we are not beginning. Wow, this is a big drop here. God damn it, I may have to manage my gold trade, mining trade. So we're down on the session. We broke critical support overnight. And with the lows of the session, thanks, Pat. And we continue to weaken up here. Head and shoulders set up. Left shoulder, head, right shoulder. Support levels broken. Obviously, a 4-hour or a 30-minute chart is not indicative of how we're going to close out the month, this month, or the quarters, most certainly. But as we're starting out right now, we're starting off with a little bit of weakness. And when I take a look at the dollar, you know I'm going next to gold. Gold is down, surprisingly enough. You know, what we did yesterday was very, very telling. And I think that, you know, I mentioned earlier about the Basel III impact on gold. And I think it's a very, very good thing longer term. If they can't, or if they don't want to manipulate the gold market and the silver market using paper gold in the future, that's very, very bullish for gold. So it allows for price discovery. So I think that what we're seeing here, again, is the one last final manipulation of the gold markets and silver markets to get out of paper gold. And we may just see some real price discovery here on gold. And if they allow it, not this August prior highs, but the highs of August 2020, where we broke out to new all-time highs for like 2 minutes, we may be through that in a heartbeat, because yesterday morning, it was even before you had the initial jobless claims reported, gold was moving up higher. And once we got the initial jobless claims, and I even said yesterday morning, if you go back, beware of initial jobless claims, that if they come out bad, expect gold to rally and expect a pullback in the dollar. That's exactly what happened. And did I expect a $35, $40 move in gold? No, I didn't. But I expected some legs under gold. And sure enough, man, they ripped it up higher. And now we've dropped down into a consolidation. Very, very healthy. Really, really good stuff. So gold is looking pretty good. Just remember, before you get heavy into a gold position, remember that monthly chart of gold where you still have your stochastics losing momentum. So there's no great reason right here, right now, to go jumping in with both feet, getting all excited with gold. Nibble, nibble, nibble. As we begin to show strength, add more. Take some comments. Good morning, Michael Anthony Carter. Hey, good morning to you, Michael. Is the S&P dead or what? No, I don't think it's dead. We want to take a look at. You want to take a look at the higher level view. What's the macro picture? On a daily chart, it really. You know what? Let's rephrase. Is the S&P 500 dead on a short-term time frame, meaning an intraday or daily time frame? You can make that argument. Is it dead on a macro view, on a higher level, quarterly, monthly time frame? No. It's a correction. You still have. Let's say that the Federal Reserve is telling the truth, which is rare, right? Let's assume that they're telling the truth, and they're going to taper in December by $15 billion. Will the markets rally on that? They may. I would argue that they may not, because you have the law of diminishing returns. The markets need more QE to keep moving up higher. But still, in the end, the Federal Reserve has the back of the market. They're still going to be buying over $100 billion worth of treasuries and MBAs, mortgage-backed MBSs, mortgage-backed securities every month, supporting the market. If the markets begin to weaken, they'll tweak it up a bit. There have been times where I've seen them buy mortgage-backed securities and treasuries $100 billion in a week. Not even forget the month. So while they may jawbone expectations down a bit, and the markets may follow short term, they're going to be behind the market. It's when the Federal Reserve steps back with their QE in reality, and you have the markets realize that there's no net underneath this high wire act that we're playing. That's when the market's in big trouble. That's when there's serious trouble. Until then, I don't think that it's done unless you have a geopolitical event. Let's take a look at talks about China printing 100 billion or something like that. China's got more debt than we do, believe it or not. They may say that the United States is the most indebted nation in the world. We are one of them. We're probably second, though, to China. China's technically more in debt than we are, and they're reliant upon flows of dollars into that country to stay open. I mean, if we ever cut the flow of dollars into China via Hong Kong, they're done. They're toast. We could cut them off like this. So China, I don't think it means all that much by them buying back. I sold a lot last week in anticipation of the correction. Good for you. Smart move. No shame in booking profits. All right, so let's take a quick peek at silver. Silver had a very good day yesterday. We're up on the session by a half percentage point, 30-minute chart outside reversal bar, but we're still looking good here. We're going to go to PLTR and IBM in a moment. So I didn't forget about you guys. Natural gas coming off a little bit. Man, this has been in fuego. We're going to be watching Boyle. Boyle is a leveraged ETF putting you long of nat gas on any pullback, as well as cotton. There is a cotton ETF. Cotton is ripping right now. I don't know if I have the symbol for cotton. I don't think I've ever pulled cotton up on the futures market. For Sunday Night Futures Live, and for those just joining in, if you're not familiar with who I am, subscribe to whatever channel you're watching this on. I don't think I put the link in the bio section, my bad. But you'll get notified when we go live. Twitter, Facebook, as well as YouTube, of course. Let's see, futures, look up. So I hate that noise. Sorry about that. All right, so this is not working. We'll go through the here's cotton. I know it sounds crazy. Who the heck trades cotton? We do. We do. Look at this rip. This is a daily time frame. This is not significant to me at all. What's really significant is the I've been sharing you live streams on my Twitter page, Bob. Thank you very much. Appreciate that. Oh, Michael. Yes. Yes. You thank you for the kind comments on Twitter. I did see them yesterday. I went out last night. I meant to play catch up on Twitter. I'll send you out a shout out. Thank you very much, Michael. Appreciate it. Thank you very much. Let's take a look at a monthly chart. So here's what's significant. This is the macro trade. I would not buy cotton. I'm very bullish on cotton. I would not buy cotton right now. You got to allow for the steam to come off. Commodities, you get ruthless rallies and ruthless sell-offs. So I'm not going to be the least bit surprised this quarter, maybe next quarter, for a retest of resistance at around 95.60 on the continuous contract. We'll probably buy in before that time, or definitely at that time. But the shortages are really creating an opportunity in the commodity market. Indicators looks rock solid. Monthly RSI and Stokes, very, very strong. Do I have a weekly chart saved here? No, I'm really starting brand new. I have no charts of cotton. Beautiful breakout. We're trading up and into the third standard deviation Bollinger Band. So again, folks, don't chase it. Daily time frame, same deal here. Lots of shorts getting squeezed. You don't want to be a part of that getting long right here, right now. You're going to get a pullback. 96.71 is an interesting point to get long of at. I just had an alert fire off on Thinkorswim. That's probably the Nasdaq breaking out. Yep. Nasdaq 100 broke out of that base. It was no great shock. And there you have it. Higher lows. We're going to move up higher here into the open. And they can erase these losses in a heartbeat. All right, let's take a look at some chart requests. Folks will be using TrendSpider. I don't have a link to them set up. I did this very, very quickly, setting up this live stream. And again, folks, if you have any feedback at all on the live stream, I was doing swing trading today for a couple of years. I didn't think I was getting the traction that I wanted in terms of audience size. So if you have any feedback on what you want to hear, what the format is, anything positive or critical, constructive criticism, open to it. Lord knows I'm certainly open to it. Provide it. I'd be more than happy to listen to what you have to say, because we're going to be reformatting the morning shows into 2022. So we will be back, even with a new name. Suggest a new name. Coffee Talk with Bob. I'm thinking about pancakes with Bob. Something fun, lighthearted. All right, TrendSpider, 35% discount code, automated technical analysis. Use discount code CON3, 35 CON. Let's take a look at PLTR. We went over this yesterday. I was asked whether or not it was a short. My answer, no, it was not a short. The reason being, even though we put in a bearish key reversal on the month for September, we closed right at a support level. The last thing we want to do is short into a support level, right? So, and it's significant support, right? Because it was resistance back here. So we can't ignore that. Would I buy it? Maybe. But to get a definite, I would want to. And to say buy, not as an investment. This is not an investable stock right now, unless you're really thinking long term and you love the fundamentals. You know, I'm more of a short term swing trader when it comes down to stocks like PLTR. So can we have a pop up higher and a retrace up to the upper band of resistance? Sure, no doubt about it. Our weekly chart, we're poised to close at support at around 2408. We closed at 2404, so we're down a couple of pennies below that mark. We're right there. Daily chart, we've had 4 sequential down days, long candlesticks. These long continuous candlesticks to the downside normally come in 3s. We got 4. I would definitely not short into this. Definitely not, because it's all about probabilities. All right, so the probability of a continuation move lower from here is improbable. Sure, we may move lower. The probability of us closing lower is improbable. So I would not short into this sell-off here. Would I buy it? I would probably buy any sell-off this morning and look for a counter-trend rally up and into maybe 26 bucks a share. And beyond that, 26 bucks a share. So that's my take on PLTR. If anything, it looks more of a long than it does a short, but it's only a short-term long. After that, after we get a relief of this oversold condition, quote-unquote oversold condition, we may see a resumption of the downtrend. Here's your declining downtrend channel, the upper band in green, to IBM. Caffeine charts and trades. I like it. I'm going to take that under advisement. Caffeine charts and trades with Bob Desmond. That's very good. Okay. $16 price target on PLTR. That's pretty bearish, but you know what? The monthly chart certainly says that it could happen. So I wouldn't rule it out, no doubt about it. But right now in short term, expect a counter trend move. Jody, I like coffee talk. All right, so we're getting a theme here: coffee, caffeine. All right, we'll work it out. Thank you, Jody. Samuel. Oh, is Sam on? Sam from Italy? Michael saying hello. Gotcha. All right, let's take a look at IBM. Samuel, how you doing, brother? It's been a while. Sam is from Italy. I always say that too. Like if I say Sam, he's got to be Sam from Italy, for whatever reason. And Sam was always on our morning program. So I always miss you, Sam. Think about you when I go live. Thanks for being here, pal. I love IBM. IBM is looking very, very good. And I'm talking from a higher level view here. The reason being is that what we're seeing here on a monthly time frame is a very strong, and I guess we could use here's the automated trend lines. We could use their trend lines. This upper band here in green is resistance on a monthly time frame. And if we break out above it, that would be a very bullish event for IBM. Michael, we're short of the small caps. That means nothing in and of itself. Right now, we are bearish on the small caps, but they will probably rally today off the lows. So we may get a short covering rally today, being Friday, of course, because people don't want to go home. A lot of traders don't like to go home flat. Excuse me, short. They want to go home flat. Monthly breakout, long. We're going to keep this active for a while. So our alert is set here. And there it is. Let's take a look at the seasonality of IBM. Oh, this is on days of the week. That's why. Okay. Let's go back. Sometimes you go back too far. It loses context. Let's go back to the past decade. Okay, so seasonality over 11 years. October is a very bearish month for IBM. Extremely bearish. It's the worst month of the year. But I like the monthly chart. I'm not going to back away from that. Would I buy it right now? We'll take a look at the weekly and monthly daily charts. We don't have a monthly breakout yet, but I think that this month may create an opportunity, because if you look at it from a contrarian's perspective, you know, if October is a bearish month and we like the monthly setup already going into October, that's a good thing, because maybe it'll create a trough in October where you could buy, because now you have the data behind you saying, you know what, we're going to head into a seasonally favorable November timeframe. Yeah, in December it gets wonky, but when you move into the new year, it becomes more favorable. So if you get a huge sell-off here in October, I think that creates an opportunity and the potential for a rebound late October. And you'll be happy that you bought into blood in the streets if one scenario is created in the markets and they sell IBM off early on. Let's see if this is consistent going back further in time. We'll go back to, we'll go back to 1971, the year that Nixon took us off the gold standard, and why both couples have to work now to support a family. F you, Richard Nixon. Seasonality going back 50 years. For the most part, I mean, really, this is really a smoothing mechanism. We're up about 50% of the times in October, slightly less. So let's take a look at the weekly chart now. I've really gone over time here. I really enjoy this, to be honest with you. That's why I talk ad nauseum. The weekly charts, we broke out. IBM broke out last week. So really, when you think about that, you have the S&P 500, which was down. Yet IBM broke out. Talk about a tell. That's a huge tell. So IBM is looking very good here on a weekly time frame. It's showing relative strength versus the S&P 500 daily chart. Daily chart not so good. Yesterday was a reversal day, but certainly you want to keep in context that we had a down day in the markets. So what? IBM closed down. It's the weekly, monthly charts that matter most. In fact, let's take a look at IBM on a very macro time frame, which is a quarterly time frame. And you're seeing a big base get built here on IBM. And in fact, I would argue I don't have a quarterly chart. Let's create one. I would argue that IBM you could use this two ways. We're going to go very conservative here. One, we broke out in Q2 last quarter was a retest of the breakout point. The however is that we have yet to take out the prior highs of Q2. I think, though, that IBM can be bought. If you're a long-term investor, I like the setup here. We have broken out on a quarterly time frame. We have retested and successfully held on a quarterly time frame as well. I would nibble, open up a small trade, stay small. If they wipe it out this month, as we talked about on seasonality, that's an opportunity. If they break it out above 151.10, game on. Get very, very aggressive to the long side because you'll be at clear blue skies, no overhead supply above, and IBM is going a lot higher. And, what's this? Michael. You're very welcome, Michael. Anytime, pal. And with that, folks, thanks for joining in. Don't forget to leave a comment, subscribe, like, dislike, subscribe to TrendSpider, and the discount code again, so I don't get it wrong, 35CON, 35CON. I'll talk to you on Sunday Night Futures Live. Until then, have a profitable trading day. Thanks for being here, and have a great weekend. Be well.